So what do I look for before taking a trade? How do I manage that trade when I'm in the action? And some final thoughts on what you can do to be a better trader. It all starts right now in this video. Hello guys, welcome. My name's Johnny with the Investing for Beginners community that I created over 6 years ago. We have now built up that community to over 70,000 members. And I also started a Learn to Earn team where we trade live every single morning at market open. If you guys are interested in something like that, subscribe to the channel and smash that like button, and then go to that second link in the description below to give you access to our Discord server, 100% free, where you can see all my past morning live streams. And if you're a investor, not necessarily a trader, then you can check out our first link that'll give you access to our private group on Facebook of over 70,000 members. All like-minded individuals who want to do the same thing, and that's learn how to beat the stock market. So, guys, let's get into it right away. 3 focuses before a trade. What do I look for before getting into a trade? And how do I identify a good trade setup? Well, it's simple. It's all about direction. And we need to have a direction going up. Upward momentum is going to create a solid direction, right? We don't want to invest in something that's selling off, because then that just means we're going to lose money, and we don't like to lose money. Okay? That's the first rule of investing, never lose money. So, I would say direction is extremely important, okay? Now, number 2 is patterns. If you see a pattern of a company going down and then up, and then down and then up, and then down and then up, that's a pattern. Now, not all companies or stocks have to stay along with that pattern, but more times than none, the patterns repeat themselves, okay? And for all the technical traders out there, you want to wait, I'd say, even 15 to 20 minutes pre-market to see clear signs of direction, to identify support levels and resistance levels. We talk about that in our live trading sessions every morning. That you identify patterns, you identify your support levels and resistance levels, right? Key levels. And just like today, there was a support at $20 and a resistance at $21, resulting in a 6% profit margin. Now, moving on, speaking of profit margin, my third key focus before entering a trade is opportunity cost. And you got to have a good opportunity cost. You wouldn't, risk $1 to make $1. That's not good opportunity cost. But if you risk $1 to make $10 or $100, then that opportunity cost is much greater than your risk. Now, I also want to be selective on what I'm trading. I don't want to have, 20-day trades in a day. I want to be selective and maybe have 1, 2, or 3-day trades for that day. So I want to minimize the amount of trades I take. I want to maximize my profits and my opportunity by first identifying patterns, key levels, and direction going up. Okay, so those are my 3 focuses, or 3 key focuses before taking a trade. Now, what do I do when I get into action? What do I do when I'm actually in the trade? Well, I wouldn't necessarily put all my position size on that first initial buy-in. Okay, I like to split up my position size into 4 separate buys. Okay, that's about 25% or a quarter of what I'm willing to invest. So say I want to invest, 1,000 shares of a company. I would then start by doing 250 shares and then adding to that position as it starts to show upward momentum. Okay. To break it down a little bit more, say I want to buy 100 shares of a company, okay, to be a little bit more realistic with some of the day traders out there and new investors that are just getting started. Say you have $1,000 and you want to buy 100 shares of a company, okay, I would only buy 25 share increments. Okay, so let's just say they're $10 each a share. That's $250 on your first one. It starts to go up, you buy another $250. Goes up, you buy another 25 shares. And then it goes up, you buy another 25 shares. So now that this is going up, you're averaging up your position size, right? And when it gets up here, then you can sell all 100 shares that you have for a profit. Now, why do I do this? Why don't I just buy 100 shares at a bottom and watch it go up? Well, because there can easily be a change in direction. If you bought 100 shares here and it went down, then you're going to cut your losses at more of a risk. Compared to if you have 25 shares or 25% of that $1,000, then it goes down, you can cut your losses and have a very minimum risk or very small loss when you're trading. So that is a good example of averaging up with light position sizes and splitting them up. Some people like to take 3 trades or 2 trades. I'd say 4 is a really good number because, okay, I have $1,000, but I'm only going to put 250 here. If it goes down, well, then I'll cut my losses. If it starts to go up, then I'll add to my position until I see a change in direction, and then I'll sell. Okay, so that's a really good strategy or technique that I use when I'm in the action, when I'm actually in on a trade. Now, the second one is managing risk and cutting losses. You don't want to buy here and it goes down, 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 and before you know it, you're down 50% of your position because you didn't cut losses early. If it goes down even 1%, I'm cutting losses. 2 or 3%, I'm cutting losses. I'm not going to wait till I'm down 10, 20, 30% to cut losses, okay? You don't want to force a trade. You don't want to think, oh, well, it's going to go down and then it's just going to go right back up, okay? Why would you want to do that? If it goes down here, right, and then it goes back up, you're literally breaking even. You're breaking even. Get out of the trade as it's going down, buy when it's low, and then average up to get to this point. You don't want to buy here and sell here because that is literally break even. You didn't make any money, but you also didn't lose any money. Sometimes traders will do that and then they'll suffer a bigger loss. So be aware of that. Okay. Next on the menu is my third key step or key, area when I'm taking a trade is to be efficient, getting those perfect setups, visualizing the potential and visualizing the risk, locking in profits early, or any indication of resistance, okay? Being efficient on your trades, risking 1% to make 10%, okay? Being efficient, visualizing, can this continue to go up? Is it at a good support level? Can I see myself making these profits? Can I also identify the risk and losing money and where would I stop out? Okay, and then also locking in profits early. Maybe you have 25 shares, you add 50 shares, and then it starts to go down, you lock in profits, okay? Because it can end up going back down and then go down even further than where your entry point was. Okay, so those are very important when I trade, and they're good examples for anyone who's just starting out. Kind of good like techniques or kind of like things to live by when trading, right? So we talked about our 3 focuses before a trade: direction, having good patterns, and understanding key levels, and understanding your opportunity cost. We then talked about the 3 things that I would do as far as an action plan: averaging up, managing risk and cutting losses, and being efficient on your trades. Now, I have some final thoughts, and it starts with having a good mindset, okay? A lot of trading is psychological, so if you didn't get a good night's sleep or if you're having a bad day, then you may trade worse. You may make bad decisions. So you want to make sure you're in a good mental state when you trade, get plenty of rest, drink water. If diet and exercise is important the day before, maybe not drinking so heavy on the weekends for anyone who does drink. That way you're fresh on Monday morning. Um, and just having an overall positive mindset and understanding the risk, understanding the potential, and then moving on from there. So the second one is confirmation, right? You want to always make sure that you have a confirmation that the stock is going in the direction that you want it to go or that you think it's going to go. Previous patterns do tend to repeat themselves, but they don't have to. I want you guys to realize that. Patterns are there as indicators to help us as traders, okay? Patterns can repeat themselves, as you know, if you've watched any of my morning live streams at Market Open, you can see key levels of support, key levels of resistance, back down to support, back up to resistance, and those levels will continue until there is a break of pattern. Now, if you have a support here and it's just kind of going up and down like this, and then it goes down past support and breaks that key level, then easily you can see that that pattern was broken. So just knowing and understanding that patterns do repeat themselves, but don't always have to, is a really good thing to live by. And then knowing when to sell, know when to lock in your profits, know when to sell. I do it all the time. I lock in profits way too early, and I leave a lot of money on the table that I could have made. But any day that you end on a green day is better than a red day. If you consistently stay green, then your account will slowly start to compound and grow over time. As long as you can lock in those profits, whether it's 1%, 5%, 10%, a couple dollars, a couple $100, whatever it is for your account size and your trading style, you should be able to consistently lock in profits day after day. I have an 80% success rate, so for every 10 trades I make, 8 of them are successful. I minimize my losses on the 2 bad trades, and I try to maximize my profits as much as possible on my 8 good trades. I have been green consistently every single day for the month of June, and like 60 to 70% consistent in the month of May, and just every month it gets better and better and more consistent to where soon I will no longer have red days. And if I do have red days, they're going to be very minimal, right? To where it's not going to affect my account size as much. Now, final thoughts are understanding what you are trading and how much you're trading with, and realizing it's not forever. If you trade with $1,000 now, and you are consistently making profits and you're consistently trading, at a good pace, and you're understanding what you're doing, then you can easily, grow that to 5,000, 10,000, 100,000. But the same principles apply when you have a higher amount. A lot of people say, well, if I only had $100,000, it'd be easy. Well, it's not. It's just as hard as if you had $1,000 or $100. Just because you have more money doesn't mean it's going to be easier. And you need to understand that where you are now, whether you're trading with $100 or you're trading with $1,000 or even $10,000, that you're not always going to be at this key area in your life. You're going to grow, and you're going to eventually be trading with much more money, which means there's going to be more risk, but there's also going to be more reward and more profits. So understanding that now as a beginner trader, that you're not always going to stay where you're at, but by learning now wherever you are can give you the tools and the ability to trade when you have those larger account sizes. Now, a lot of traders, here's my another final thought here. I want you guys to understand that you need to start trading to learn. Trade to learn how first. Many new beginners want to right away, hey, I want to make $100 a day. I want to start making profits. And you need to learn how to trade right? Trade to learn before you trade to earn, right? You want to be able to understand why you're buying this, understand risk management, understand account size, position size, understand confirmation, direction, patterns, key levels. And by understanding that, you will begin to learn how to trade. So then you can put yourself in a better position to earn and profit when you trade. Okay, I've been doing this for years and more consistently over the last 6 months. And I can tell you right away, trading 3 years prior, once a week or once every couple of months or, every other day is not consistent. And I was not able to get my edge when trading. But now that I have consistency, I'm trading every single day. I'm in the market. I'm watching key levels. I'm looking at support and resistance. I'm looking at key patterns and identifying areas that I find of interest and value to buy into a company. Then you will begin to make money, right? But you have to first learn how to trade and then start becoming consistent. And then lastly, find out what works for you, guys. Find out what works for you. If day trading is not your style and you lock in profits way too early and you left a huge amount of money on the table because you could have held it overnight, well then maybe you consider swing trading. Maybe you like to trade reversals like I do, or oversold companies like I do. Maybe you like to trade only stocks that have upward momentum. Maybe you like to trade news or earnings reports. Whatever your trading style is, you need to figure that out on your own. I have my own personal trading style as well as many other traders out there, and they all found out what works for them. I found out what works for me. And in doing so, by learning all these key, all this key information, I hope you were taking notes, that you can first learn how to trade, then start profiting from trading and finding out what works for you, and then kind of adjusting it as time goes on to make you the most efficient trader out there, to maximize your profits and really see those big opportunities when they come up in the market. I hope you guys enjoyed. I have considered creating an ebook kind of outlining all these key steps and focus areas before entering a trade, during a trade where all the action is, and then when selling, and final thoughts on it once we are out of the position. So if you guys want me to do some type of ebook or some kind of a trader checklist, leave a comment below, smash that like button, and I'd be more than happy to do that for you guys. All right, so I'll be trading tomorrow. Tomorrow is Friday morning. Or if you are watching this later on in the week or year, I do trade live every single morning, Monday through Friday at market open. So whatever time the market opens in your time zone, you can be sure that I'll be trading anywhere from 30 minutes to an hour, where you guys can get inside my head, understand my thought process when entering a trade and exiting a trade, and overall just get involved with our community of over 70,000 members and ask questions and share ideas with everyone in that live stream. So thank you guys for watching. Let's end the year on a green note, and we'll be seeing you all in the next video.